probably will decline.
Okay. Yeah, and I'll ask a quick follow-up and then the second question. I guess just the sense, because it's still very firm in fourth quarter, if you're seeing a pretty meaningful fall-off into first quarter, like some years 10%, 2019 declined over 20%. So just try to get a rough feel of the type of decline factor you're gaining some content and share. That's the follow-up to the first. And then the second question, actually just on gross margin, because of a lot of headwinds, I think, Wendell, you talked about. If you could give, just on a couple of these, depreciation, factoring the recent Capex, how much up, and whether it's also front-end or more back-half loaded, given the 3-nanometer ramp. And then for the startup cost for N3, if you expect similar to N5, given smaller percent of revenue, how much dilution from N3? Okay, thank you.
Okay, Randy. So let me summarize. So Randy, quick, I think we will not comment on the first quarter, but I think we can make some comment just sort of in terms of the overall inventory picture in the, looking into next year.
Well, actually, if you ask my opinion on the inventory picture and the inventory correction, it's too early to provide a specific number. However, the inventory correction will likely see its biggest impact sometimes in the first half 2023.
Okay. And then the second part related to the gross margin, maybe Wendell can address. What is the outlook for depreciation next year? And then is it front or back end loaded? And also what type of dilution we expect from 3-nanometer as it ramps in 2023?
Okay, Randy. For full year depreciation for next year, it's too early to talk about that. But this year is mid-single digit increase year on year. But next year, we expect it will likely to be meaningfully higher. We will give you the guidance in January. As to the dilution from N3, it will be between 2 to 3 percentage points from the whole year basis on our gross margins.
Okay, and actually one follow-up. Do you think on a single quarter with the inventory correction, do you expect to keep the 53 and above, factoring we're coming from a very high level, even through that first half inventory correction?
Right. It is too early to talk about 2023 gross margin, including a quarter over quarter. But even with all these cost challenges, we believe our structural profitability can be maintained, and we are confident to deliver a long-term gross margin of 53% and higher.
Okay.
Okay, great. Thanks a lot.
Thank you, Randy. Operator, can we move on to the next participant, please?
Next one to ask questions, Charlie Chan from Morgan Stanley.
Hi, good afternoon. Thanks for taking my question. So my first question to management is about whether the company consider a share buyback, because the company seems to suggest the recent inventory correction is just a cyclical. You're still very positive on the long term, and I think a share price really reveal company's long-term value, right? Also, shareholders' value. So not sure if a company want to do share buyback or cash returns.
Okay, so Charlie's first question is that, although there's cyclicality, the long-term outlook appears good. Would the company consider doing share buyback?
Yeah, Charlie, we constantly review all the different options of returning cash to shareholders. For share buyback, at this moment, we are not considering it. We think our cash on hand will be better kept to invest in our capital expenditure to make a better return for our shareholders.
Okay, understood. Thank you. And also, my second question is also about the U.S. sanction impact. I know the company said that the impact is limited and the long-term impact remains to be seen, right? But my question is about the China market to TSMC. Is that as strategic as before after this event?
Okay, so Charlie's second question, he wants to know with the recent U.S. regulations and the impact, how do we see the China market? Is it still a strategic market for TSMC? Is that correct, Charlie?
Yeah, meaning whether how does company think about China for TSMC's kind of long-term picture? How important is China going forward?
Charlie, I would like to say that every region is important to TSMC. However, let me say that under the condition of full compliance with all the rules and regulations, TSMC will continue to serve all the customers all over the world. That's our position.
Okay, including China.
All the customers.
Okay. Got it. Thank you. Those are my questions. Thank you.
Thank you, Charlie. Operator, can we move on to the next participant, please?
Next one to ask questions, Sunny Lin from UBS.
Hi, thank you for taking my questions. Congrats on the steady performance. So my first question is on the geopolitical tensions. I wonder, given some of the considerations regarding the geopolitical issues, how would you evaluate a longer-term impact from customers potentially diversifying from Asian foundries, and how are you managing the risk? Thank you.
Okay, so Sunny's first question is that given the geopolitical tensions, how do we evaluate the long-term impact and the risk of customers using other foundries? Is that correct, Sunny?
That's right. Thank you.
Okay. Sunny, we still believe the most important thing is technology leadership and manufacturing and our customer trust. And so in different locations, manufacturing or whatever, we still think that technology leadership is the most important thing. And so that's our strategy. We make it simple, that technology, manufacturing, and customer trust.
Got it. And so a quick follow-up is that going forward, should we assume an acceleration of your overseas expansions just to diversify the production sites, i.e. if there could be a fab built in Europe?
Okay, so Sunny's second question then, can she assume that we will continue to increase the overseas global footprint expansion and also particularly in Europe?
Well, we will continue to increase our overseas portion in manufacturing based on customers' need, in fact, based on the business opportunity, and also based on the operations efficiency and economics. And so whether we are going to be in the Europe, we are in preliminary evaluation and do not rule out any possibility. Again, I would like to say the decision will be based on customers' need, business opportunities, operation efficiency, and cost economics.
Got it. Thank you. I actually have a second question on HPC. So with the increasing usage of chiplets, how would you manage the risk in the case that some dies are made at the other foundries and that have production issues and therefore impacting the production at TSMC as well? Thank you very much.
Okay, so Sunny's second question is with increasing usage and adoption of chiplets in HPC, how would we manage the risk in case, I think, Sunny, you're saying if dies at other companies or places have production issues, how do we manage the risk of that impacting TSMC?
Well, Sunny,
that's right. Thank you.
Sunny, In fact, we would like our customer manufacturing every chip inside TSMC for sure. But if there's a case that they have to use other companies' dies, we will work with our customer closely and minimize all the risk that as time goes by. That's what we are doing right now.
Got it. Thank you. That's very helpful. Thank you.
Thank you, Sunny. Operator, can we move on to the next participant, please?
Right now, we have Laura Chen from Citi.
Hello. Hi. Thank you for taking my question. I appreciate that if you can share with your latest plan in your Nanjing fab. Like CC already mentioned, you got the license for the 28 nanometer in Nanjing. So I'm just wondering that do you also need the license for the 16 nanometer in the Nanjing fab? And also, going forward, what's your plans of your operation in China? That's my first question. Thank you.
Okay, so Laura's first question is about Nanjing fab and our plans. She notes that we have received the one-year authorization, so our 28 nanometer expansion continues as planned. Her question is, do we also need a license for the 16 nanometer that we have in Nanjing? And then also what is our long-term future expansion plans in China?
Sunny, let me answer the first part. Sorry, Laura. Let me answer the first part. Yeah. The one-year authorization that we receive covers the Nanjing facility. So it's both the 28 and 16.
Okay, great. Thank you.
And then the second part is, what is our long-term expansion plans for China?
Okay, as CC said, we will be operating, serving all the customer under the condition that we will fully follow and in compliance with all the rules and regulations.
Okay, that's very clear. My second question is also about the fab globally in the longer term. We know that in overseas operation, usually they will have a much higher operational cost. So how would that impact the TSMC's long-term margin trend in our view? Or maybe you can give us some estimation about your estimate of the percentage of the margin in different region or the cost difference comparing to Taiwan.
Okay, so Laura's second question is around our expansion of our global manufacturing footprint. She wants to know that overseas fabs, are the costs higher? Do we have a breakdown how much the cost difference is in Japan and US versus Taiwan? And then overall, with overseas expansion, and if they are higher costs, how does this impact our long-term profitability and margin?
Okay, Laura, let me answer this question. The initial costs of overseas fabs are indeed higher than TSMC's fab in Taiwan, and it's mainly because of higher labor costs in different layers of the supply chain. We continue to work closely with the U.S. government as well as with our customers and supply chain partner to manage and minimize the cost gap. Now, through these efforts, we believe we can continue to earn the proper return and deliver the long-term gross margin of 53% and higher.
Okay, that's very clear. Thank you very much.
Thank you, Laura. Operator, can we move on to the next participant, please?
Next one to ask questions is Rolf Bulk from New Street Research.
Thank you for taking my question. I was hoping you could give some more context around the 3 nanometer tool shortages that you mentioned. Is that primarily lithography and then specifically EUV related? Or do you also see shortages in other tool segments? Thank you.
Okay, so Rolf's first question is around 3 nanometer and the tool shortages. He wants to know if this is just specific to lithography tools and EUV specifically, or is it more, I guess, broad-based?
Let me answer the question. Actually, it's more broad-based because of our demand is high, And certainly the photolithography tools is included, and one of the most important one.
Thank you. That's very useful. Then as my follow-up question, it would be great to get an update on your N2 node. With your current visibility, is the node still on track timing-wise? And is there anything you can share on how you think about yields of N2 versus N5 and N3 at the same stage of development?
Okay, so Rolf's second question is on N2. He would like an update. Are we still on track? What is the timing for N2? And also if there's an update on yields as compared to N3 and N5 at similar stage.
Okay. I said before N2 is a very difficult one, but our progress so far so good. Actually, it's a little bit ahead. And we are going to have a mass production introduced in the 2025. And our customers' engagement so far are very, let me say that, comparable with the N3, N5. And the status today is very comparable to the N5 and also N3. So we are happy to see that, our progress so far.
Does that answer your question, Rolf?
Thank you very much.
Thank you, Rolf. Okay, operator, let's move on to the next participant, please.
Next one, we have Charles Shi from Needham & Company.
Good afternoon. Thank you for taking my questions. I have two, both on CapEx. The first question is really, and I understand you are not here to guide 2023 CapEx, but I think a few years ago, you did provide some long-term CapEx, a range of CapEx when your long-term CAGR guidance was 5 to 10%, and you think 10 to 12 billion CapEx is going to support that long-term CAGR. I think you just reiterated your long-term CAGR to be 15 to 20%. Do you kind of have a similar range of CapEx for us to think about over long term? Again, I'm not asking you about 23 CapEx here.
Okay. So Charles' first question is about really, I think, Charles, you're asking about Capex correlation with growth. So he notes that in the past, we had said our long-term growth would be 5 to 10%. So during that period, we said we would spend between 10 to 12 billion. So without asking about 2023 specifically, Charles wants to know, now we believe we will grow between 15 to 20% CAGR in the next few years. What type of CapEx range does that imply, or should he assume? Is that correct, Charles?
Yeah, correct.
Okay, Charles. I think it would be, let me try to answer this question from the capital intensity point of view. When we invest heavily to capture the future growth, the capital intensity will be high, like last year and this year. But if the growth slows down, the capital intensity may become lower. Now, longer term wise, we think that a normal or a reasonable capital intensity may be somewhere between mid to high 30% longer term wise.
Thank you. The second question is about very near term into the next quarter, basically, because you just slashed your 2022 CapEx, from what you guided 1 quarter ago by about 4 billion. If I hear correctly, half of that is can be attributed to the tool delivery issues. But the other half, can you clarify a little bit, because you kind of said it's about capacity optimization. Is that kind of like a 2 billion reduction in CapEx, mostly a reduction of the equipment spending, or is it something else you're reducing here and trying to improve the capacity optimization here? Thank you.
Okay, so Charles' second question is on the capex, and he is asking, we have now guided to around 36 billion versus close to 40 billion last time. We have said half of it is related to tool delivery, and the other half is capacity optimization for the midterm demand outlook. So his question is, with the capacity optimization, is this mainly also reduction in tools, or is this some other issue? Right? Is that correct, Charles?
Yes, correct. Thank you.
Okay, Charles, I think you're right that the half of that difference comes from tool delivery issue. The other half is the capacity optimization. By that, and that's because of the current uncertainty in market conditions, so we're tightening up our capital budget. And it relates to the whole capacity. It's including tools, including the other stuff within the CAPEX. Yeah, and it's mainly N7.
Thank you very much.
Yeah, and so I think...
Got it. Thank you.
Yeah, it's tools, and also as CC and Wendell mentioned, some of the adjustments we have made to our N7 and 6 capacity and CAPEX due to the aforementioned reasons. Thanks. Okay, thank you, Charles. Operator, can we move on to the next participant?
Next one, we have Brad Lin from BofA Securities. Go ahead, please.
Thank you very much for taking my question. So first of all, still congratulations on the strong earnings. And my first question is about, well, if we look at the long pages of the new regulations from the U.S. on China, it can be really broad and with a key, of course, with a key aim on the supercomputing. But however, given the wide variety and also wider application of chips that TSMC makes, isn't it, in theory, difficult to identify and make sure the chips and the business complying with the regulation? Or will there be some extra costs and overhead costs by that, which we should notice in the future? Thank you. That's my first question.
Okay, so Brad's first question is with the new U.S. regulations. He knows it's very long and very wide in scope. So he is wondering if it's very hard to interpret, and therefore will this result in greater overhead costs for TSMC to ensure that we are and continue to be fully compliant with all the regulations?
Well, actually, although it looks about more than 100 pages, but we initial reading and feedback from our customer, actually the regulation is very simple to be understood, like a control threshold at a very high-end specification. For example, like a 600 bit per second, that bandwidth or those kind of things. Or it's very, very easily to be understood, and we continue to work with our customer to make sure that we fully complied with the regulation.
And so Brad would also like to know, Wendell, from a financial standpoint, will we incur more overhead costs as a result?
At this moment, we don't think so.
I see. Thank you very much. Just a slight follow-up, because the regulation is just aiming at the supercomputing, but I know in a supercomputer, definitely there are still some low-end chips used inside. So if we happen to make those, and then we are not sure that it is going there when we produce them, would that cause some confusion or bring some trouble to us? Thank you.
So Brad's second question is, in a supercomputer, there may be very specific high-end restrictions, but there's also, companion chips, other chips used. Would that cause us an issue?
The companion chip, there's no restriction or no regulation at all. So we rely on our customer to work with their own customer for that kind of a product.
Got it. Thank you very much. And then maybe, if I may, second question would be, clearly many countries would like to build their own foundry or build their own domestic supply chain. We have learned that the cost will be a major downside. So my question would be, can we charge different pricing? That's basically demanded by our clients, right? So with higher costs, if they want to buy from US or buy from Europe, can we charge a higher pricing if that's based on the same node? And also, but if we think about the bright side, would you please share how TSMC could utilize these kind of opportunities to strengthen our competitiveness in the long run? Thank you. That will be my all questions.
So Brad's second question is about he notes that many countries would like to have domestic semiconductor manufacturing. TSMC, we are, as CC said, also increasing and expanding our global manufacturing footprint. So with higher cost, will we be able to charge a higher price? I guess that is essentially his question.
Actually, TSMC's pricing is strategic and consistent. And we, all I can say is we will continue to share our value. The value is come from the technology, manufacturing, and also that our relationship with our customers. Whether it is in a different country or it's in a different place, it's not in our consideration. Again, I would like to say we will continue to share our value. And our pricing is strategic.
Okay. Thank you.
Thank you very much.
Thank you, Brad. Operator, can we move on to the next participant, please?
Next one, we have Mehdi Hosseini from Susquehanna International. Go ahead, please.
Yes, sir. Thanks for taking my question. I also have my first multi-part question. I'm just looking at your customers' inventories that are on a days of inventory are at a 25-year high. And it seems, based on your commentary, that the demand forecast, especially looking at the first half, has weakened. So it seems to me that the inventory correction is going to sustain into Q2, and most likely your shipment would be declining sequentially in Q1 and Q2. Just looking at your customers' inventory, is that a realistic view of the first half? Because you also highlighted the fact that inventory correction is going to sustain throughout the first half. I'm not asking for a guide. I'm just trying to better reconcile your customers' inventory with your commentary. And I have a follow-up.
Okay, so Mehdi's first question is on inventory. He notes customers' inventory levels are very high. We have talked about our observation from an industry level that demand is softening in consumer segments. And so his question is, what is the outlook, and do we expect the inventory correction, I guess, to be more notable as we go into first half 23? Is that correct, Mehdi?
Yes, and particularly, you've always had your wafer shipment up in Q2, and I think 23 could be an exception, and it could probably decline, and that's how I frame my question. So the question is, could wafer shipment decline in Q2 for the first time in many, many years?
Well, Manny, our current forecast, actually, our supply chain inventory will peak in third quarter this year. And we observe that the inventory will start to reduce in the last quarter of this year. And we expect it will see its biggest impact in the first half, actually, first half of 2023. The detail of the first quarter, second quarter, or something like that, we are not ready to share with you yet because of, we continue to work with our customer and to understand that their demand.
And if I may have just a quick follow-up to that. does that imply that your customer forecasts are changing so rapidly that we have to wait for January call to get the final read on the first half?
No, Mehdi, I think we have always, in the past, we will guide for 2023 and talk about 2023 outlook and first quarter during the January conference, right? But I think CC has already said that with the inventory correction, we expect our business to be more resilient during both the down and upturn, given our technology leadership, and that 2023 is a growth year for TSMC. Okay? We will not comment further on first quarter or second quarter.
Okay. And my second question has to do with depreciation that was down in Q3, down year over year and Q over Q. And this is despite the fact that Capex was up 65% in 2021. Does that have anything to do with tool optimization? And to that extent, as the second part of the question, would you consider converting 7-nanometer tool to 5 and 3?
So Mehdi's second question first is depreciation. Why it is down Q on Q and year on year, and then also would we consider converting capacity?
Okay, Mehdi, the depreciation, we look at it from a whole year point of view. For this year, as I mentioned, we expect it to be up year on year by mid-single digit. And for next year, it will be meaningfully higher, but we will share with you more in January. Please understand that every year there are depreciation newly going into the depreciation table, and also there are depreciation coming off of the depreciation table. So what you're looking at is the net result. And as to converting N7 capacity to N5, as we mentioned earlier, N7 demand issue is cyclical rather than structural. So at this moment, I don't think we have that kind of plan.
Okay. Thank you, Mehdi. In the interest of time, operator, maybe we can take the questions from the last two participants, please.
Yes, sir. Next one to ask question, Patrick Cheng from CLSA. Go ahead, please.
Thank you for taking my question. You talked about 2023 to be still a growth year. Would you say that growth is pretty much the same compared to what you expected a quarter ago, or it is lower? And if so, what's driving this lower growth expectation?
Okay, so Patrick's first question is about 2023. Is the growth that we see for 2023, how does it compare versus our expectation for 3 months ago for 2023, and what is driving this?
Yeah, well, I think it's too early to talk too much about the 2023, but we maintain our statement that 2023 we still expect it as a growth year. Okay.
Do you have a second question, Patrick?
Okay, that's helpful. And maybe a follow-up. If I may, any leading indicators that you are monitoring that could help you or help us determine the growth outlook aside from monitoring the client's wafer orders?
Okay, so Patrick's second question is looking with inventory correction. He wants to know if there's any leading indicators that we can look at or he should look at to see when indications that the cycle is bottoming.
That's very hard to answer your question. Actually, if you look at the whole industry, that's from the smartphone and the PCs, and you read all the quarterly report from all major players, you can sense that when it will go up and when it's a downturn. So we definitely have some information. Internally, we do the analysis. And today, we are taking a very conservative way for our planning. That's all I can share with you.
Thank you. And I guess that's what we've been doing as well. But obviously, we don't have a crystal ball. Well, I don't have any further questions. Thank you for taking my question. Thank you.
Okay. Thank you. Operator, can we take the last participant, please?
Yes. The last one to ask question is Frank Lee from HSBC. Go ahead, please.
All right. Thank you. I wanted to ask, I guess, a question on your N3, N3E. Is the ramp for both nodes going to be around the same time, or is there going to be some difference in scheduling?
Okay, so Frank's first question is on ramp for N3 versus N3E. Is it at the same time?
Yes.
Okay. Actually, it's not at the same time. Right now, we are ramping up by N3, and N3 is supposed to be 1 year apart, but because of the progress so well, so we might pull in a little bit for 2 or 3 months, that's all. So they are still not at the same time.
Right. Okay. And my second question is, I know you've reiterated your margin, long-term gross margin target being unchanged, but I guess given the headwinds you're seeing now through the first half of next year, with the currency move already gone up quite a bit, utilization rates dropping, is this? Are you going to see any potential change in the pricing strategy? I know you can't comment too specifically, but you have seen some price increases in the last 12 months or so. So from going forward, would the pricing strategy still be relatively unchanged given the change in the overall market environment?
Okay, so Frank's second question is related to pricing with the inventory correction and with some of the cost challenges. He wants to know, will there be any changes to our pricing strategy during this correction? Is that correct, Frank?
Yes. Yeah, thanks.
Okay, Frank, let me answer the question. Again, I want to stress that our pricing actually is strategic and consistent. So you say that do we have any plan to change it? No, it will be consistent. All right, and not based on any cycle or opportunistic, and we actually, most important, we always work closely with our customer to provide our value and to help them to win their own end markets.
Right. No, I'm not suggesting there's any opportunistic pricing, but I just get the market situation has changed for your clients who are probably going through a more difficult time. Would there be some change in strategy to help align with them as well, or would it largely still be the same policy that we've seen?
We stay the same. We are consistent.
Okay. Thank you.
Thank you, Frank. All right, this concludes our Q&A session. Before we conclude today's conference, please be advised that the replay of the conference will be accessible within 1 hour from now. The transcript will become available 24 hours from now, both of which will be available through TSMC's website at www.tsmc.com. Thank you for joining us today, and we hope you will join us again next quarter. Goodbye and have a good day.